Okay, a real quick video on this RCL, Royal Canadian Cruises. They've had some trouble lately, some serious trouble, and they're going to have even more to come. Their earnings are coming up here on April 18th. It doesn't look like it's going to be good for them. Let's look at the chart here. You've got a 200-day moving average here around 62, and the stock is trading at 66, so it's still a nice 4-point range there. However, if you look, the last area of support is already broke. Here that was around 68, and this 200-day moving average doesn't really jive where it is. It actually is down here further where my line is. This looks like a great area from where the breakout occurred and from where this test was, and so that puts you about 66 and a half or so. So that's almost a 10-point range. I think that's a really good play. Just use your stops as normal. If it gets too much above 68 here. But I think this is really good. You've got some RSI that's failing. It's almost under 40 pretty soon here. You've got on the negative wave count's good. It's growing. And the MACD histogram is still below 0 and breaking down. And it's going into a bad event, which is the earnings. So I think it's a really good to 65 or maybe even lower. And if we got lower than that, I don't want to get too greedy here, but if we got lower than that, maybe down into the 50 range. So it has a very good potential. Let's look at the options. Let's see, 38 days in March. It's plenty of time. I'd stay away from the 62.50s. It looks like a really crappy spread here for some reason. I don't like that. 65s are good. It's got a little bit of a bid-ask spread, but put it in an order, a limit order, and see if you can get a little cheaper. I'm sure you can. Even the 60s are further out of the money I like, but with a low target, a 56 or even 50, you could do these too if you had to. The spread's a little bit better. Like I said, it's a little further out of the money. You could take a little risk off by maybe selling these 50s or these 55s against the 60s, and that makes it a little more attractive. There's a few things you can do. But overall, I think this is a real nice setup to the downside. This 200-day moving average doesn't mean a lot to me on this particular chart because of what I spoke of here about the real area of support. So I think this thing comes down here. Always protect your money, use money management, and we'll see you on the next one.